Hit it.
It's Friday, February 12th, 2021, episode 118. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome back to the show Dan Carlson from Tailwinds Research Group. Dan is a microcap stock picker, and he shares with us three of his favorite names. Then in Talking Charts, Patrick consults the Oracle to divine what may lay ahead for the markets.
We then look back at what happened in this week in trading history. We end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We've got a great show. Lena, hop on. What beer are we drinking this week?
So Kevin and I are drinking Spearhead Brewing Company's Hawaiian-style Pale Ale.
It's a pale ale, so I'm excited. I'm hopeful.
Thank you for pointing out that I'm left out from this. I appreciate that.
You can drink any beer of your choice.
Yeah, I'm back to drinking the Banks beer over here in Barbados. So it's,
I got to read something about this.
Okay, go for it. Yeah, go for it.
So while most beers come from preconceived notion, this quintessential Spearhead Ale comes from a question, what if? What began with some leftover pineapple has come to grow a legacy. This West Coast Pale Ale is bold and hoppy, brewed with pineapple for a crisp and citrusy character. It is naturally carbonated, unfiltered, and dry hopped for a delicate carbonation, allowing hints of tropical fruit, zest, and pine to shine through, ending on a refreshingly dry finish. This Hawaiian-style pale ale is for those who see themselves as equally experienced and adventurous drinkers, folks that are proud to support the innovators of craft beer who call Ontario home.
So, Lena, I was worried about it. Pineapple,
Yeah, I was surprised.
Doesn't go well with beer. But I'm wondering if my Canadian is showing through, because you know how we love pineapple on pizza? I know for the whole world's mad at us for doing that, but we invented that. No, it's true.
Is that right? It's Canadian?
Oh, yeah. That's a Canadian thing, and the whole world is mad. You watch. We'll get all sorts of Twitter things telling us that it's an abomination. It should never be done. And, like on the trading desk, we used to have a rule, no fish, no fruit. And I always used to say that's on pizza. And I said, that's bullshit. We should put pineapple on it. But anyways, so I was worried about it. But I think my Canadian is showing through, and I actually like this pineapple beer.
Oh, wow.
All right.
Yeah.
Well,
okay.
Kev, give us a disclaimer, buddy.
Okay, nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the short stock tick, irritable bowel syndrome, and bank balance bloat. Now, I just want to give a big shout out to our buddy Bill, who gave us those three side effects. And Bill is spending a few days or weeks up in his cottage in Snow Lake. And I am from Manitoba, and I had no idea that Snow Lake is almost in Thompson. And he was writing in, it was minus 32 degrees.
Wow.
And for our American listeners, it doesn't matter. 32 is like where they converge. Minus 32, it's the same.
It's near death. It's near death.
It's like when Kramer went downtown in New York City and first intersected, and he was all confused. Anyways, thanks a lot, Bill. Really appreciate it. Stay warm, bud. It's our pleasure to welcome back to the show Daniel Carlson, the managing partner of TW Research Group. Thanks for joining us again, Dan.
Thanks for having me back, guys. Appreciate it.
It's a great environment. We thought we'd have you on because small cap stocks are all the rage. It was interesting because it seemed like 6 months or even a year ago, people were talking about how large cap was going to eat the world and how indexing was going to make it so that active management would never, ever make money again. And yet we look at the last 4 months, it's been unbelievable. The Russell microcap is up, something like 80% in the last 4 months. But truth be told, you've actually been doing well even before that. You had a great year last year, and we're looking forward to, seeing if you can continue that. And so far you have. You've had a great couple of months. So I'm looking forward to getting into your picks. Before we do get into those things, why don't you tell us a little bit about the environment as you see it?
Well, I think, we were on together in December of 19 and the environment was tough at that time. As you said, I was performing well with some good stock picking, basically in a crappy environment. I think the environment for microcap has changed, and you never want to say it's changed permanently, but I do think we've got some structural changes taking place that are going to have lasting implications. And the first thing that's really helped microcap is the free cash that the Fed's pumping out, right? I mean that having traders at home sitting in front of their computers generating liquidity. But I really think the whole GameStop and the whole Wall Street bets and the Reddit crowd has fundamentally changed the environment for microcap. And so I can't put enough emphasis on that. When you look at what happened in microcap in the past, past few years, you had a bunch of companies that were, I call them, public venture capital. So they needed money, they were burning cash, but they had some good stories to tell. And you had a bunch of algorithms that would just look at the fact that they were burning cash and needed to raise more money and would sit on these stocks and squash them and short kind of across the board as a thesis, we're going to short microcap. And they were kind of impervious to risk of doing this. There are not that many players in the space. There's not a lot of big money in here. And so companies were sort of held over a barrelhead every time they needed to raise money. And now you're looking at the situation recently, the rally has been a very low quality rally, meaning the weakest stocks, the most heavily shorted, the ones that you wouldn't want to own are going up the most. And that's because all of a sudden the game has turned on Wall Street where you can't just short a stock forever and expect to make money doing it. And so I think that's created an environment where you look at going forward, if you have a good story to tell, you'll be able to get financing much easier than in the past and build that business. So I'm excited about it.
Have you seen that in terms of when you're talking to the companies? Are they expressing the ability to actually raise money a lot more easily?
Yeah, it certainly is the case. And I actually put one slide that I forgot to put in there today. This company, if you pull up a HJLI, company called Hancock Jaffe, it's a classic example of a company that the stock went down forever. They did financing after financing, raising $5 to $7 million at a time. And then this week, you can see there's a little island down at the low. They just raised $40 million 2 days ago. That company has fundamentally changed now. They don't need money for the next 3 years. And the science behind it is excellent. This is one of my new top picks here just this week because this company has fundamentally changed, and it's a direct result of the environment where you can get access to capital that wasn't there before.
Well, why don't you tell us a story? We'd love to hear why you like this company.
So this company, well, as I said, it was chronically underfunded, but they have two medical devices that are in development, and both have the early clinical data has been fabulous. One is a valve in your leg that helps your circulation, so you don't have to wear pressure socks. There's currently no medication, no devices out there for that. And the other is a artificial graft for around your heart during a heart transplant. And there's also nothing approved in the market for that. So they're going after sort of novel indications. The early science has been phenomenal. And the company went public too early with too little capital and just suffered from bad financing after bad financing. And now you're looking at them, it's a 70, maybe 65 million market cap sitting on about 40 million in cash and two devices, each of which I think can be sold post approval, which would be about a year from now on one, for $200 million at a minimum plus royalties. So the opportunity is super exciting. And I don't see what the downside is after this financing.
And so are you finding that the healthcare space is kind of a sector where there's lots of opportunity that you're focusing more on, or is it, across the board, you find all sorts of exciting new companies?
Well, I personally, I like growth stories. So I'm pretty much focused on tech and healthcare, right? I think healthcare has kind of changed over the years to be less risky and therefore to be a much better investment. In the past, I would have avoided biotech. It was like a 1 in 10 chance that you're going to make 10x on your money. But really, the companies, with all the genetic testing that's taking place and just the level of research and knowledge that's out there, the odds of a biotech failing now are much lower than they were in the past, and therefore I feel the space is much safer in that sense. You still have chance of failure, obviously, but look at the number of companies that are succeeding, and it seems like it's 50 to 75% of them. Yet the upside.
Do you think the market has?
Huge.
Oh, sorry, I didn't mean to interrupt. Do you think the market hasn't figured that out yet?
I do think the market has figured that out to some degree, but not in my space of microcap, where once again these things are hardly underfunded. And if you look at pull up the chart, SAVA, SAVA. This is just like the most recent one. They published some data in October. Stock went from 8 to 120.
Right. And so, what was this drug? Well, like this was obviously a home run, but was that? Were you in that name? Like, was that one of your names?
No, not one of my names. It's for Alzheimer's disease. It fights inflammation related to Alzheimer's, and frankly, the data was good, but not great. But you're looking at a stock that was heavily shorted, and had zero expectations. Yet it's when you start using biomarkers, you can start showing success much easier and attracting the right patient population. And these people have gotten a lot smarter the way they run their trials.
Right. So listen, I want to go back just a little bit to this idea that the environment has changed. And I happen to agree with you, but I guess some of the pushback might be that to say, maybe someone that's looking from this from above might say, yeah, you know what, right now all the hedge funds, they've gone and they've walked away and covered their shorts. But who knows, in a year's time, they're going to be back to their old tricks and doing it again. What would you say to that person that might be more bearishly inclined?
Well, I mean, there's always a pendulum, right? And it swung too far with GameStop. We all know that, and the stock is probably going back to 10 because fundamentals take over at the end of the day, right? But in general, I really think that you look at like long-term capital, what they were doing could never go wrong, and then it did. So people start putting a little less risk on going forward, right? So you're going to be thinking twice before getting heavily short across the board in stocks that have potential game-changing, like a cassava, game-changing drugs, and a lot of people out there that like them and can move the stock against you, right? I actually think there's going to be a lot of legislative changes around shorting as well. Not sure how that all turns out, but I think that industry in general is going to be changed fundamentally.
In what way? Would you have any ideas about what might happen? And are you worried about that as a market practitioner?
Well, I think one thing that probably happens is the ability for a group of people, obviously, to be short more than 100% of the shares that are outstanding, right? I mean, that makes no sense. That's how you crush a company, and no matter how good or bad they are, into non-existence. So I think at a minimum, you won't be able to be short 140% of the shares outstanding like was happening in GameStop. But I also think you're going to start moving towards more rapid settlement. And that the whole Robinhood crisis is kind of the catalyst for that. And I think there's a lot of if you dig into these short theses, but I think there's some validity here. There's a lot of trades that aren't settling over time, and I think they're going to. And that's how people kind of pass a short on throughout time without getting a borrow. And I think that's going to go away.
Right. And all these things are obviously something that's been depressing these companies. They were the ones that were most acceptable to it. So now all of a sudden we have a bid to these companies. I would argue as well that, you look at your performance, you look at a lot of these microcap performance. I think that this strategy is going to be, people are going to wake up to it and realize that there is, as Goose told Maverick, it's a target-rich environment. And I just feel that we're going to see more people attracted to this thing, and they're going to realize it's probably easier to make money on the long side than on the short side.
Well, of course. And you talked about active management, and that I mean, right now everyone's making money hand over fist in the big cap names, or have been historically, right, for the last few years. And wait till they underperform for a while, and wait till people realize that Google doesn't go up 20% a year every year, right? And eventually, you're going to see a reversion to the mean, right? And that'll help.
And are you looking for that? Do you think that's about to come? I know you're a small cap fella, but is that something you're expecting?
Oh, I think it happens eventually. I haven't really focused on when that'll happen.
Right, you're too busy making money on all your small names. Okay, so let's walk through some of these names. What did you bring for us? What little gems?
Well, I brought three kind of what I call platform plays. So which chart you pulling up first, and I'll talk about it. How's that?
Okay. So INMB, Ingra, Nancy, Mary, Bob.
Yep. So this is one of my favorite stocks out there. Basically, I'll give you the 5-second elevator pitch. TNF inhibitors are rheumatoid arthritis drugs. They're the largest selling drug franchise out there at like 20-something billion a year. The problem with them, they're an anti-inflammatory. The problem is they're immunosuppressant. Immune has a next generation TNF inhibitor that is not immune suppressant, which means that you can use it in a number of situations where you wouldn't use a TNF inhibitor because of the comorbid effects of it. So if you look at TNF inhibitors, so many people have been on it for so long, you can do retroactive studies. TNF inhibitors have been proven to reduce the risk of Alzheimer's, which is amazing, right? I mean, 80% less chance of someone getting Alzheimer's if they're on a TNF inhibitor than if they're not. But because, if you take the drug, you might get cancer, you might get diabetes, there's all these other effects that they don't prescribe it for that. Well, this company has a TNF inhibitor that's not immune suppressant. So it's going after a disease, Alzheimer's, that's maybe the biggest disease out there, and it's basically untouched. There aren't any approved Alzheimer's drugs. And they've got something that, if you look at the group that they're in, TNF inhibitors is proven to work in that space. So this one has amazing potential, and I think is incredibly de-risked at the same time. And that's just a kind of unheard of risk-reward scenario in my book. So I love this.
You say it's de-risked in what way? You mean that they've already got their funding in place? And
no, I mean, a drug is very binary. It works or it doesn't, but they've proven by looking at all the TNF inhibitors that they've proven that they work in Alzheimer's. So this company has, I mean, it's kind of like saying that we've created an electric car as opposed to a gas car, but we know cars work to get you to the office, right? So they're going to get you to the office in a different vehicle that's just as effective.
And does this thing just get taken out? Like, does it announce some good news and then boom, it gets bought? Is that kind of the end game for these guys?
They just put in a poison pill to try to prevent being taken out. They will probably, because it's an anti-inflammatory, and if you look at do any digging on inflammation, it works. It's a problem in Alzheimer's. It's a problem in cancer, like cytokine storms. It's a problem in COVID. They actually have a COVID trial going on. It's a problem in arthritis. So they'll probably partner on different indications to answer that question.
Okay. And so, do you put targets on stuff, or do you just go I think the risk reward is to the positive here. I think it's headed upward, and that's all I'm worried about.
That's funny you ask. Generally, I don't like to give targets because I'm a long-term guy, and I just think that if they execute, the upside's huge. I actually put a $250 target on this for the end of 2022.
Okay. Well, there you go.
Oh, that's pretty good.
If it comes through, it'll be a huge win. Okay, let's go on to the next one. Adam, A.T. as in Thomas, Oscar, Mary.
Right. I think I mentioned this one to you guys the last time. You said, give me one more name that's out there that's interesting. Atomera has a process that goes into the making of a semiconductor chip that basically reduces the energy consumption of a chip. They have been working on it for a number of years. They have basically zero revenues at this point. But they did just this year sign up their first licensee, who should probably go into production at some point next year. So this is almost like a biotech story in technology, right? There's no competition. They have their own little niche that they've developed. If it works, it's huge. A lot of smart people are saying these guys could get a royalty of 1% to 2% on up to half the semiconductor industry over the next 10 years or so. So you get a $400 billion industry that these guys could be getting, billions of dollars in royalty income starting next year with their first client. So that's why.
Sorry, didn't mean to interrupt. Is it an American company, Dan?
It's an American company. It's down in Silicon Valley. Yeah.
Yeah, because what do you think? Are you following that the move to try to get more, like the fact that there's been all this semiconductor kind of shortages and the issues about us Americans not being as reliant on foreign supply? Like, do you have any thoughts about that?
I think got a lot of thoughts about it. This company should be a beneficiary to some degree, but in general, the whole space is taking off rapidly and for a big space because of, you look at connected cars, you look at 5G, the demand as more devices get connected, the demand for chips is just exploding, right? AI is taking off. I mean, everything is pushing towards more computing power. And frankly, it's a big national political, geopolitical risk out there. I'm not, my companies aren't playing in that space so much. So, but there's certainly some of them are beneficiaries of this tailwind, which is massive.
So you're like an ex-Californian, but you're being in that kind of scene a little bit. Would you have any kind of insights or thoughts about how this COVID and how, let's just say, technology has evolved over the last year? Like, do you have any kind of insights, inside baseball observations for us?
COVID and how technology has evolved.
Like in terms of like we've seen this huge, rally in all of these technology companies, and it's been the place to be, and Silicon Valley has been an enormous beneficiary of it. And there's all sorts of kind of political, let's just say, cross currents that are being there. And I know you've spoken to me in the past about San Francisco and what's happening there. And I was just wondering if you have any general insights in terms of how you see this whole sector kind of playing out in the coming years.
Well, I think, technology is going to continue to grow and be huge. There's no doubt about that in my mind. I mean, the changes taking place. You look at, I got two boys that both work at Amazon. They will never go back to the office full time, I don't think. And that's changing. That's changing. The repercussions of that are significant across many industries, obviously. You talk about California, the companies are fleeing there. But I think you're going to see. I don't really have a great answer for your question, I guess. I think you're going to see some of the bigger companies increasingly under the microscope out of DC. Especially these social media companies, and I don't know how all that shakes out in the end.
So now you were mentioning your son's working at Amazon. You said they're not going back into work. Like, is it going to be a function of that we're going to see people all throughout the kind of America and the world doing this, like on a grander scale? And will we actually have this kind of work from home that we all envisioned from kind of 1999 when the first .com bubble came, and we all thought we would be doing this, and it ended up being that we were miles away from that. But are we now actually at a point where we can truly work anywhere?
I think you're going to have sort of a hybrid. I think companies are going to start demanding people come in to some extent. You're going to probably end up with shared workspaces or something. And I think for the next generation, it's important that people are in work. I mean, that's one of the neat things I've seen with my kids at Amazon is the mentorship programs they have there. And you don't get that if you're not in the office at all, right? So, it's
Yeah,
definitely
so how do they do that? Because that is actually one of the biggest problems. Like I heard Goldman Sachs saying, you know what, like it's tough to have a trainee look over your shoulder on Zoom. So, they were saying, well, we're going to go back into work as soon as we can. And my pushback to everyone that's always said, oh, you know what, this has changed the world. I'm always like, I'm not so sure. Yes, it's been a great stopgap. But if you're actually a younger person, in some ways, this has been terrible for you.
For sure, for sure. No, the world has changed. I mean, some industries are going to go back. I mean, you're going to need to have a trading desk. You're going to need to have people at Goldman, right? But in other industries, like my daughter is graduating this year. She just got a job offer. They said she could work out of either office. They're probably going to be, in 3 days a week, out 2 days a week. It just, it's a good hybrid for her. She's going to have mentors and be in the office, but not full time, and she got a choice of which office to work from, etc. So it's kind of a different world that way. And that's that's a biotech.
Does San Francisco and Silicon Valley survive this kind of work from anywhere you want?
Oh, I don't know if you spend much time there. There's two different beasts, San Francisco and Silicon Valley, right?
Okay, fair enough. Okay, yeah.
Silicon Valley, it'll survive. It's going to go through. I mean, everything in life is cyclical. It's got some troubles in front of it. San Francisco's got much bigger issues, I think. They're driving companies out, and the response from the leaders there is, screw them, we'll just tax everyone else more. Well, that's really not going to work too well, I don't think. But it's my opinion.
Okay. Well, let's go on to your next pick, which is TFFP, Thomas Frank Paul. What do you got here?
This is my last platform play. This company has a methodology to take drugs that are typically swallowed or injected and turn into a dry powder form, which means they can be inhaled or they can be shipped in a dry powder and reconstituted before injection. That means 40% of the world's drugs can be improved by their process. They've tested on numerous different things where, because you're going through the lungs, you get better uptake. Therefore, you get higher efficacy at lower dosages, which really means less adverse events, less side effects, because you're taking less drugs. So all of a sudden, a lot of drugs that are really good for something but toxic, you can have them treating the disease without hurting the people as much. So these guys, they're also another pre-revenue company, but they've been signing, as they say, 2 to 4 material transfer agreements with potential partners on a weekly basis, and I think this thing's getting ready to be huge. And the reason I mentioned that they can powderize something to be shipped and then reconstituted to be injected, there's a very good chance that they will be involved with one of the big vaccine manufacturers for the COVID vaccines, for phase 2 vaccines. So what you can do is you can break cold chain storage in vaccines with their process. So that's huge. I mean, that's world changing, right? So it's an exciting story that's off most people's radars, but has going to have a couple big years in front of them, I think.
So speaking of off people's radars, how do you go about finding these companies? Like, how many companies do you follow and whittle down? Like, how just walk us through what your day looks like.
So my day is different from anyone else you talk to in this industry. I've really focused. My strength has been building a community around my group, a community of investors and companies, and I have my own newsletter that goes out, right? I have my own private chat room for all my premium subscribers, and I spend my day just pretty much focused on my companies for the most part, about how just talking to them and talking to investors about them, and just trying to get to know the stories better. I don't spend a lot of time looking for new ideas, and I have a very strong network that gives me a lot of ideas, and I kind of let my group in general sort of, I like to say I crowdsource these ideas. So like I say in my chat room, if an idea is taken off, then it's something that I think is going to probably work, and I focus on it. So
that's awesome. So how many names do you have in your portfolio?
I think I cover 15. I probably own 10 to 12 of those stocks at this time.
Right. And so you brought us your historical performance. Why don't you walk us through, kind of tell the people how you've done recently?
Yeah. So year to date, like I said, it's been frustrating because I've seen a lot of crappy companies outperform me. But I'm up, and these are net of fees, so 29% on a net basis. So it's closer to 40% gross year to date.
And then last year was like a swing for the fences, terrific year.
Yeah, last year was despair in March, right, and then took off. 71% net last year was a good year to say the least.
Dan,
2019
I'm
was
looking at
a frustrating year.
I'm looking at this, and you've started your firm. You've never had a down year. I don't want to gooch it on you.
Yeah, no, if this year ends up down, this is the last time I'm on this show. I'll tell you that much.
And so, listen, before we go, I want to talk a little bit about, you mentioned California a little bit, and not only are companies leaving California, but you have left California. And no, you didn't go to Texas like everyone else. You went to the East Coast. You came over to our side, and you live in Virginia. Why don't you walk us through what that is and how you found life on the other coast?
Yeah, we're in Charlottesville, and the reason we picked Virginia is our daughter goes to the University of Richmond, which is about an hour from here, and isn't leaving the area. And I mentioned both my boys live in Seattle, work for Amazon. So we were basically familyless on the West Coast and felt it was time for a change for a number of expensive reasons, right? So we picked Virginia. It's beautiful here. We're in basically farm country outside of Charlottesville, which is University of Virginia's here. It's a great college town, and there's 30 wineries within 30 miles of me, and a bunch of breweries. I'm having a local beer right now, and it's just gorgeous country. My two favorite things are tennis and mountain biking, and there's actually both here in Spades, so it's really cool.
Oh, I didn't realize you're a big mountain biker. So you know what? Actually, I just got myself a new bike. I bought a 29-inch. I have not ridden a 29-inch. It's shocking what you can go over with it.
Oh yeah, you can go over anything. What'd you get?
I just got a giant. I'm a hack. Like I just got I'm not getting any of those fancy stuff. So I see you're not that far from Richmond. Have you gone? I'm a big windsurfer, and have you gone yet to the Outer Banks and visited?
Not yet. We've only been here since November, so it's kind of cold. But
okay. You have to go. It's some of the most beautiful, spot. It's a huge sand dune out there, or kind of strip of land out there, and it's awesome. You're going to really, really enjoy it.
Very nice. Yeah. Well, I left maybe the best windsurfing area in the world. Right. The bay is wonderful. San Francisco Bay.
So now, how do you find the difference? Are the people on the East Coast a little less laid back and a little more kind of go? Or are you out in the country enough that everybody's just as laid back as California?
I tell you, it's this one person. I was in a shop. She said, "Oh, it must be a real culture shock for you moving here." I said, "Yeah, I'm not used to everyone being so nice."
Honestly, California is generally supposed to be this nice, laid back place. You didn't find that?
I think, and this is my read on the situation. I think that California has gotten so expensive and so crowded that everyone is on edge, and like people there bring up politics all the time. They get mad and yell, and nobody talks politics here. Not that they don't care. They just, people here just are living let me tell you, the cost of living is 33% cheaper here. So they have across the board. And the amount of house and space you get for your money is like 6x California. So I think people here are so much more relaxed and happy than the people in California.
Well, that's terrific. I always say that's it's easy for people to be polite when they're driving and there's not a ton of traffic. And it's whenever the traffic gets really bad that you see the worst in people. It's kind of the same theory as you have about California.
Well, there's a lot of traffic in California, among other things.
That's right. And so, tell me, your big mountain biking. Is there actually some mountains close? I'm not familiar with it. Like, is there good places to go?
Oh, sure. John Denver sang about it. The Blue Ridge Mountains are just down the street here. But what's actually the best mountain biking in town is it's kind of funny. It's right on the University of Virginia campus. It's called Observatory Hill or O Hill. And
Yeah.
just there on the campus, and it's not a big hill, but there's some really good, you'd use your shocks on your Giant for sure on that trail.
Well, that's terrific. Now, listen, why don't you tell people more about where they can find your service? Give us the whole kind of spiel.
Yeah, so I have a website where I write about the companies I cover, and I actually have a weekly newsletter, and it's all free to sign up for. I do have a premium service if you want to know which stocks I'm buying and when I'm buying them, and that's $250 a year. But everything, for the most part, you can get 90% of what I have for free, and it's at twresearchgroup.com.
Terrific. Well, thank you very much for joining us today, Dan. It's great talking to you again.
Oh, thanks for having me. I love what you guys do, and I appreciate the opportunity.
Patrick, time for talking charts. It's an exciting time in the market. I'm looking forward to this one.
Oh, lots to talk about, but let's just quickly go through what we talked about as the top 3 things last week. We asked the question, how low does gold go? And you made a bold call and said it's not going much lower. And, well, I was not really going to push too hard back on you, but it didn't really go that much lower. I mean, that was literally when we recorded the show. That breakdown candle was the low, and it more or less bounced since then. You know what? It's more of a trade range. It was a reverse prairie dog on the downside, just kind of faked out and didn't break. Will we see more downside in gold? I don't know if the price action has really shifted bullish yet, but it certainly didn't follow through selling. What's your thinking?
I thought it was as crystal clear as can be when you frame the question: will gold keep going lower? You didn't go and say, will it bounce? You said, will it keep going lower? And the answer was going to be no.
All right. You heard it from Kevin. All right. So let's jump to number 2, which was, would we see the VIX down in the teens? And, well, we closed at 1997.
Wow. Yeah. Actually, today was the first day that you saw really pronounced VIX selling. It helped that it was also over. This is a long weekend. So they take one extra day of theta out of the market. So that could have been it. Who knows?
Yeah.
Let's see, though, if it keeps going on Tuesday when we wake up.
Yeah, I think that we haven't really broken to fresh lows yet on the VIX. But in terms of like the 1-year lows, or at least the post-coronavirus period. But certainly we have definitely gravitated to that bottom in the range. And it'll be really interesting because with the markets pushing these highs where we're at, I would have thought the VIX would have already broken 20 long time ago. It's interesting. We're almost at 4,000 and it's only toying with it now on the market.
But Patrick, I wouldn't have thought that because I've been telling you for a while that VIX does not have to go down when the stock market goes up.
No.
It does not have to be a linear relationship.
No, it doesn't.
We can have a period of higher volatility in an upward market.
Yeah.
And that's what we're having. Just like 98, 99.
So number 1, inflation numbers. Were you surprised?
I was surprised because they were a little bit light and they were unfortunately kind of boring. Having said that, it doesn't seem to matter. The market's looking through and is actually continually selling off the long bond. So even though the numbers aren't showing up, the market is kind of getting out ahead of the inflation numbers. It's almost like once they come, the market will breathe a sigh of relief and maybe the bonds will rally.
Yeah. All right. So let's go through the top 3 things to watch next week. And so number 1, well, we have to mention OPEX, right? And option expiration is coming up. We've seen with more and more options trading going on, the volumes in options playing a bigger and bigger role. We have that option expiry and the gamma pin play an increasing role, obviously, in how things play out. So, is there something you're particularly watching when looking at it going into OPEX next week?
No, not anything in particular. You obviously watch for the old kind of rally all week, and then kind of you get the I don't even know. Usually on a quad, you'll get the big morning rally up in terms of the expiry, but this isn't a futures one, so it's really all on the close.
Yeah.
So it might just be the whole week. Having said that, I really do feel that we're in an environment where options are meaning more and more, and you nailed it on. You hit it right on the head when you said that this is something people have to watch for. They have to be aware that this is moving markets, pinning markets, causing all sorts of action from the tail is actually wagging the dog, and so we have to be aware of it. Put it on your radar.
So the good friend of the show, Brett Kachuba, over at Spot Gamma, he's been talking about this 3,900 pin on the S&P, and that's exactly where this S&P seems to be kind of gravitating and pivoting off of a little bit of a breakout above it today into the close. But what's interesting, he continues to suggest that there's going to be likely lower volatility into next week with the pin kind of coming into play, but really that the jump in volatility, and particularly the jump in volatility of volatility, will likely occur starting, the 22nd of February. So it'll be interesting to see whether those kind of numbers come to fruition into next week. All right.
Brent's a smart guy. I wouldn't fade him.
No. And so number 2, oil north of 60. Boy, did oil finish the week strong, right? Like that really came in midday. And we suddenly saw a jump of $1.82, and we're trading on that March contract at 59.73. It almost feels like 60 is a foregone conclusion, but the question is, can oil sustain a rally above 60 as opposed to just a small trip above it? We have some pretty significant trading ranges from the pre-coronavirus period up in this kind of 60 to 63 level. Do you think that that's at least going to act as a resistance point for oil, or do you think that this is just going to drive more and more acceleration to the upside?
I don't want to Gucci the trade, Patrick, but I think there's a lot of bears out there. It seems like everyone always hates oil. People are confused why it's going up, and yet it's going up. And it's one of those things that I think that it might catch a lot of people off guard. People are woefully underinvested. They're busy trying to sell all their stocks and stick on all the EVs. And as usual, people will will have the wrong thing on at the wrong time. What I think is hilarious, Patrick, is just think about it. How long ago was it that we were talking about negative oil prices? Wasn't that long ago?
It was a year ago.
Was it
less
even?
than less than a year ago. It was like
April,
it was May.
And here we are, and the market's taking off like it's running like it stole something. I think this could be one of the surprises. I've said it on the show before, and I'll say it again. I think there's a chance we see triple-digit oil before the year's up.
You know what? I'm actually quite bullish oil. I don't want to Gucci it, but I actually will fade your short-term enthusiasm. I honestly think that we're overdue for the market to bump its head on oil and do a little bit of backfilling. And this type of an almost acceleration to the upside will potentially trigger that very short-term swing trade blow-off at the top. Maybe it happens even at 63, 64. I'm not trying to say that it has to happen right at the 60 handle. But I think that we begin some sort of backfilling correction, but all dips should be bought. So I don't want to imply that I'm bearish in any way, but I just think that this is not the time to be putting on new positions in oil.
The trouble is, it looks just like the stock market chart. Yeah, it almost is the same thing, and they're all the same trade. They're all going on the kind of liquidity and they're reopening. So yeah, I hear you that maybe they all take a break. But I feel like they're going to go together if they go. Like
the correlation should be there. I mean, maybe not to the day, but I think that as the stock market reaches its peak levels, I think that all of these, including potentially the dollar, and we could talk about that as well. But let's move on. Right now, oil north of 60. It's going to be the one thing to watch for sure. And more importantly, does it sustain above there, or is it just a short trip above? And the last thing, which is really truly on your mind, and it's on my mind as well, but these yields have not let up. The 10-year has broken to a fresh, what is it, almost a year high? No, not yet a year high, but it's very close to it's definitely multi-month high, where we hit 121 on the 10-year, and the 30-year went north of 2.
Yeah, it closed above 2. Yeah.
It closed above 2.01. And all the steepeners are going full throttle. The twos, 10s are at 110 on the upside. That steepening is kicking in. The 5s, 30s is even breaking to a higher high above 151. So we've got the entire interest rate complex higher yields. And now that breakout happened.
Eh?
Yeah, but that breakout has happened really in the last day. Like the fresh high broke out in the last day. And what's interesting is that it really got the tailwind from oil breaking out. And obviously oil is one of the big inputs into inflation expectations. And I think that oil breaking out here really kind of gave that last spook going into the long weekend. But there's no denying those yields look like they're going. I mean, the 10-year going to 130 to 150 on the upside would be a very natural technical event at this stage. I don't want to Gucci for you because I know you're short like crazy, but I'd love to segue this into talking about some of the other parts of the bond market, actually.
Well, before you do, I have a question for you, though.
Please.
At what level does the 30-year have to trade at for you to take the posters of Lacey Hunt off your wall?
Oh my God, it'd have to be way higher. Like we'd have to be way north of 3%. Like
okay,
well, this is
there
noise down here.
Okay, fair enough. I'm
not even saying 3%.
No,
like,
I completely agree with you that a lot of people are getting all excited about this and saying, "Look at the bond market; it's doing so terrible." I go, "This is nothing. This is like to me, the selling hasn't even started. This is absolutely nothing."
2016, 17, 18, and 19 were all contained in the 2 to 3.5% range.
100% agree. Yep.
I mean, like 2.5 to 3.5% even. And so, like we haven't even gotten back into the last decade's trade range.
Patrick, I'm with you, but I just want to know the level. So give me the level.
I'm Lacey
3.5.
No, Lacey Hunt's posters are not coming off the wall. Forget it. They're not. I'm not being talked out of taking them down. Anyway,
right beside Farrah Fawcett, and then Lacey Hunt.
All right, but I want to talk about the other parts of the bond market since we're on this, right? And so everything is taking it. So like the ETF that everyone tracks is the TLT, which is the long bond ETF, breaking to a fresh low. Really just looks like at this point a retest of that March low around 140 seems like a magnet at this point on the downside. But what's interesting when you go and look at the Canadian bonds, this is the ZFL, which is looking at the Canadian long bond, also full on downtrend in Canada. But what I thought was interesting is corporate bonds. Also, like the investment grade corporate bonds really kind of rolling over. Looks like they're finally breaking down. It looks like that they're being dragged down with the treasuries on the downside. But you know who didn't get the memo?
Who?
Junk bonds.
But I'll tell you why. You give me your little spiel, and then I'll tell you why.
Well, it's the correlation to equity, right?
It's more than that, though. It's more than that.
Okay, I'll listen to that. But for me, when there's no denying the equity correlation to the low grade high yield bonds, and I think that you'll need a break in the whole stock market. But the fact that we are now seeing those credit spreads narrowing under 4%, it's crazy. And it's interesting that junk is just just not even reacting. Look, I understand that maybe it doesn't have to go crashing down because Treasury are moving, but you would at least think that there would be some sympathy pain, some cramps or something. That's something that would stall them out. But no, they're right up along that 52-week high. Like they don't give a shit. They're like the honey badger.
It is a honey badger. But Patrick, one of the things about junk is that the duration of it is much shorter than a lot of the other stuff. So the reality is that you're comparing junk and you're comparing it to the TLT. And
So
whereas
what is the average duration? 5
I
to
don't know.
7?
I'm just trying to figure it out here.
No, but what's your speculation? Just
I think
like
it's 5. I think it's 5. I think it's even less than 5 if I had to guess. I think it's like 4. And I'm just trying to figure it out.
Yeah, but investment
Here
grade
it is.
corporates.
Okay, I found it. It's 3.3.
Yeah, okay. But investment grades are longer duration? Like a lot of those investment grades stretch out to like 10, 20-year bonds or something?
So no, like investment grades also, don't forget, have the optionality, so they can refinance. They can often call it. It's complicated, but they're not as long and as well as everything else. Corporates are usually less long, and so they roll them more. So that's what's going on. Is that this isn't a credit event. These things are not. Credit is actually behaving quite well. And the reality is that that's hanging in there, and so therefore,
it's true. Like inflation expectations are not dragging on a 3-year yield as much as they are.
Interestingly enough, pull up the 2-year yield. Like you're sitting here, and everyone's talking about the bond market. Meanwhile, the 2-year yield is ticking in new lows.
Yeah.
And I got I got a lot of things.
Thank you, Powell.
Well, yeah, it's actually complicated. There's a lot of plumbing situations going in there. A lot of things happening. It's not just Powell. It's the TGA and stuff. Million moving parts there. But it's interesting because that is actually trading right on the lows. And meanwhile, the other ones are trading on the highs in terms of yields. Yeah. So that is why it's like a perfect environment for the yield curve steepening. And that is also why the junk is not doing as bad as everyone would expect.
No, what's interesting is, speaking on that, like when you look at when Nancy Davis was on our show with her quadratic fund, the IVOL, like she has those steepeners built into like all of her constant maturity swaps built into that TIPS portfolio. And there's no denying that it's finally kicking in for her.
Yeah,
like
it's been good for her because we've had break-evens exploding higher, and we also had a steepening. So it's been a perfect environment on that basis.
Yeah, for sure. So anyway, that's enough about bonds. Let's talk about commodities here for a second. And we've already mentioned gold, so I'm not going to go into to talking gold per se. But what is interesting is some of the other markets that have been moving. It's not just oil. Like copper just breaks to a higher high. It looks like it wants $4 pretty aggressively here. Like it's just up every single day, doesn't want to quit. It looks like a beautiful chart, right?
For sure, Patrick. It's I always told my readers, remind me that I shouldn't be selling it, and if I ever tell you I'm selling it, remind me that I told you that I was going to hold it forever. It's one of those close your eyes and just own it.
Yeah. Do you feel about that like that on uranium? Because I do.
Actually, I don't want to go through it, but I honestly think that our uranium might be the next thing that they start to really corner and set higher.
Okay, don't say anything else. Just quiet. Okay, we're going to quickly switch the topic. All right, so and the interesting thing, did you see the way platinum took off?
I did see it. I tweeted it out in my own little private kind of feed, and I actually bought a little bit just to be in there. I don't have a clue why it's going up more. I just seemed like when it was a breakout that nobody was talking about. Some of my favorite technical things are, Patrick, when something happens and nobody talks about it. Just quietly breaks out, new highs. Nobody's talking about it. Everyone's focused on something else.
The correlation in precious metals is usually there. Like platinum in the past, I've seen the palladium run on its own without gold and silver participating. But platinum seemed to have always had a bit of a correlation to the other ones, and this time no. This time Platinum is doing it all on its own, right?
Well, don't forget Palladium had that monster run last year.
Oh, it was ridiculous. Like you're talking about this move back over here, like that was like bubblicious. It was almost like running. But that's exactly how all bubbles end. And GameStop has demonstrated, and anyone who thinks that these other bubbles, I'm not going to mention specific stocks, but that doesn't think that this is going to be a deja vu in all of those markets. Anyway, point is, Palladium has been quiet. Rolling up but quiet, but it really is only Platinum out of the precious metals that is really running. The grains have been consolidating. I'm going to skip that over there, but I want to touch on some of the other ones. Like take a look at the way sugar has been advancing. It's been pretty good. Even actually look at the fresh breakouts in cotton.
I should just buy these. I don't think I've ever owned sugar or cotton. I should just go buy them. And maybe I'll make the top.
You know what? While you're at it, we'll pick up some lean hogs so that you can, or some live cattle.
I don't feel like those. I don't feel like I should own.
Come on, you know what? When the steak dinner you're about to lose in this week's bet comes up, you can use your live cattle future profits to pay for it.
You're pretty confident that I'm going to lose.
I don't know. You've been on a bad streak recently. I'm
That's not true. I think we've been trading, swapping back and forth, one on, one off.
That's true.
Anyway, it's just how you remember it in your mind. That's a bad streak for me. When it's even up, that's a bad streak for me.
Anyway, so coffee has been kind of muddling along. That's not our thing, but you should go and buy the dip on OJ. Come on, you gotta do this.
I've never traded OJ futures. There's a few of these softs that I've never traded, and I should go do them. Like, have you ever traded these?
I've toyed around with a couple of them, but that's not. I don't put a lot of focus on.
You experimented in university. I get it. Gotta try it once.
You gotta try it once, yeah. And anyway, but we gotta talk about some of the crazy shit that's been happening. And first of all, you know what? I love the bubble within a bubble. I want to talk about not Bitcoin just because of Bitcoin. Bitcoin's doing what Bitcoin like. Everyone's been ranting about this, but what's amazing is that the companies, and you've been writing about this, the companies that own the Bitcoin have now gone full bubble on the upside. And so what I want to do is overlay Bitcoin and MSTR.
The Mister.
And like for the longest time, Bitcoin and Mr. were working together like a nice little correlation. And suddenly this thing blasts off. Just leaves Bitcoin behind. You had that beautiful chart that you were showing with the market cap that MSTR is picking up over the net asset value of its Bitcoin. But it's the bubble within the bubble.
So I did a little math, Patrick, and so what I did is I took the company, I figured out like the market, like how many $1 billion the regular Mr. business is worth. And I don't know, I can't remember what the number was. Let's say it's $1.5 billion, okay? So I took the $1.5 billion, then I went and I took I don't know how much Bitcoin he's bought. Let's say $1 billion of Bitcoin, okay? And then I made that as my NAV. And then I figured out how much above or below it's trading after those two assets. And for the longest time, in January it was 0.0000. And since January to February, it's gone up by guess how many billion?
I saw the chart. I'm going to spoil it.
Okay, let's spoil it. $5 billion. So you are paying Michael Saylor a $5 billion premium for him to manage your Bitcoin. Now, it's a little more complicated than that because he does use some leverage, because he's issuing convertibles to do it. And the other thing about it is that for the real reason that this premium exists, Patrick, is there's a lot of people who can't go buy Bitcoin, like professional investment.
Yeah, so why not just pay double the amount for the Bitcoin? It makes so much sense.
So they go, okay, you know what? I can't go buy GBTC. I can't go buy real Bitcoin. I'm going to go buy Mr. because it's a technology company, quote unquote. Anyways, this is just a shit show. I'm
bubble
actually
within a bubble.
I'm thinking, it's a bubble within a bubble.
No. What would be even better is if Elon Musk starts buying Mister. Now, then it's the bubble within a bubble within a bubble.
He shouldn't have bought Bitcoin. He should have just bought Mister.
Yeah, exactly.
Like,
Like
why
that-
bother? Like, he should have just bought Mister.
It just
Yeah,
makes
you're
so
absolutely
much
right.
sense. It just makes so much sense.
By the way, speaking of Elon Musk, did you see today's tweet?
No,
Oh, really? You missed it?
I missed it.
Okay, so good old Elon says he wants the new Tesla Roadster to hover,
Nice.
like Marty McFly in like Back to the Future when he goes into the future. He is the Tom Brady, the GOAT of stock promotion. There will never be anyone better than Elon Musk at stock promotion. Never, ever, ever, ever. This guy is the best stock promoter that has ever lived. Listen, his fundamentals of his company are actually turning down. So what does he do? He buys Bitcoin, times it perfectly. He's got to like stick in, the news about China recall and stuff like that. Well, that's okay. Buy some Bitcoin. This guy knows how to play us like nobody's business. Hats off. He is. You got to respect
as
this
the
guy.
richest man in the world, he can actually hire all of the shysters in the world and have them as his own board of directors of shysters to teach him how to do this right.
He is the ultimate stock promoter. There is like, all of the Vancouver, sleazy stock, mining guys are just like, they're like if he came down the street, they would have a parade for him. They would just like hats off. Like they'd be just like, they would bow down at this guy is awesome. Good for
Well,
him.
you
Like,
know what?
He's really like,
hey.
think about that. He wants the new Tesla Roadster to hover. Here, I'll read you the quote.
Yeah.
I thought like maybe we could make it hover, but like not too high, so that like maybe it could hover like a meter above the ground or something like that. And then the Teslonians are like, here, take my money. Anyways.
But what's interesting is that the stock actually has been struggling though. Like you look at this,
what? I 100% agree. Do that on a relative basis. Put up that against, like, are you able to do that? Put that against the NASDAQ?
Yeah. I could
Do it. This stock is not behaving well.
I'll just put the Qs on there. Well, no, actually, because
You got to divide one by one or whatever. Can you do that?
Yeah, I'm not.
It's too much work. I should have given you a heads up before.
But
it's struggling. This stock is not that strong. It looks weak for the first time.
after a run like it had in December, it had to take a break.
Listen,
Like,
there's no way it's going to go down, Patrick, and I'll tell you why. Because I keep shorting it. I'll let you guys know when I stop. And then
as soon as you cover, then see you're the short seller that everyone wants to squeeze. The Reddit guys now know that they got to go after this Huddle fucker. That is basically. You're one lot.
Yeah, exactly. Did you see some lunatic, by the way, if we're talking about crazy Reddit guys, did you see some lunatic bought 275,000 Tesla $20 puts that expire today? I guess it didn't work. Like, honest to God, you think you obviously didn't keep up with this story. No. Someone on Tuesday or something bought 275,000 Tesla 20, not 200, $20 puts. They paid like $900,000 for it.
That's like a suicide.
Who knows what the hell is going on? You gotta love these Reddit kids. They're just like, okay, I'm gonna YOLO this money. It's probably some kid that just made like $100 million on GameStop. He's like, wouldn't it be funny if I bought these? And he's just like, boom. And how about like trying to sell like as a risk guy? Like, so you're like an option market maker, and you see someone bidding a nickel for these things. Okay, $20 put. $20. How much is that? Like, it's got to go down, 98% or something for you to make money on that? And you're like, okay, boss, I want to sell it to him. Okay, well, how many are you going to sell? Well, he's bid for 275,000 of them.
That's
I
insane.
don't. It's anyways.
I'm sure he started hitting him at 1,000 a time, and then just like the market maker just kept giving it to him. And he's like,
I would love to know the story because of who did this and what they were thinking, and like if this is something we're gonna see more of this. And this is one of the things that I've warned is that so far the Reddit community have gone after stocks, pushing them higher because that was the path of least resistance. When this market turns and we get situations where it'll be easier to send stocks down, these guys are going to be just as ruthless that way as well. It's going to be
think that
wild.
they're going to flip to after all of this GameStop stuff. Do you think that they're going to start becoming short sellers?
I think that if the environment turned and they could make money on the short side, they would make money. I think that they're actually very shrewd in a lot of ways. I don't sell them short at all. I actually think that the GameStop folks, they played that like, a Stradivarius. Like they figured it out and they did it. And listen, the people at the end that were buying it at $300-400 to stick it to the man, that's like that was the game was over at that point. But the ones that were, picking away at it at $10-20 and understood what the potentials were, they are every bit as sophisticated as the most ruthless, big monster, great white hedge fund shark. So I don't sell them short, and I actually think that when the path of least resistance turns down, they will just as easily flip to the downside. I really do believe that. Listen, there's a Steve Cohen is the most famous of the ruthless hedge fund managers. There's like a new younger version of Steve Cohen hanging out at Wall Street Bets. I really do. There's some smart folks in there, and they're gonna do it. They're gonna figure out how to make money, and they're gonna. That's my 2 cents.
Love it.
Listen, we got a lot of things to talk about.
Oh yeah, we got to talk pot stocks.
We do.
Like what the heck? Like they just suddenly they started squeezing these things. This is
okay.
Let's start with Tilray.
You know what? I actually at this point want to enter into our lexicon a new technical formation.
Okay.
And I came up with it for GameStop, and it is. Can you pull that chart up?
Yeah.
That is the Eiffel Tower formation.
That's a cheesy name.
Come on, it's awesome. It just looks just like the Eiffel Tower.
No, I hate it. It's a horrible name.
Listen, I tell you, people are gonna love it. They're gonna go with it. And you know what?
Well, we're gonna let
it's got freedom fries and stuff like that. That people won't like it because it's French, but I love it. The Eiffel Tower formation. I'm looking at the pot stocks. Tilray. Let's just put that one up. It really looked like it was going to do an Eiffel Tower on us.
Well, sure.
I think it still might.
I mean, it halved in a day.
It's pretty crazy. The fall. Listen, they paid $77 the other night for it. I was shocked. They just goosing it. Now, let's just talk a little bit about what's going on here. Afria is buying Tilray, that's if I got it right, or the other way around. I can't remember. It doesn't matter. Yeah. The long and short of it is the way that the ARB is set up is that it makes more sense. Tilray's trading at a massive premium to Afria. Yeah. So everyone is short Tilray and long Afria. Well, that spread that, you started at $1 or whatever, blew out to like $37 that one night. And no, honestly, it was just like I was trading it. It was absolutely insane. The thing was moving around like nobody's business. And the reality is that the Reddit kids, again, looked at the high short interest on Tilray and they decided to squeeze them. And, I love it. And we're doing it again. But it's not just that. It was the... I've spoken about this in the past, these rolling bubbles that we would experience. Yeah. And I would argue that the bubbles are becoming swifter, more sharper, and quicker.
My speculation, I'm sure you'll agree, but like it's the fact that the internet has created this congregation of people that get the information almost instantaneously. Like before, it used to take a while for the rumors and hot stock tips and everything to disseminate for things to get momentum. Now everyone's got that attitude that if I don't act immediately on something that pops up on my machine, then I'm going to miss it. Yeah. And it's literally amplified that once the market decides something is hot, that it just goes right there and then, and it does, and the money that imbalance of order flow just starts this face ripping rally, and it's like it's what is going to define this entire bull market kind of bubble phase of this, which is this like parabolic instantaneous rises in these securities.
You put it great. Like that is a terrific way of putting it. My worry is that all these retail schmoes that are coming in at the last minute, they're getting stuffed like butter tarts. Like think about it. They're like, how many people
Butter
bought?
tarts get stuffed.
Yeah,
I like from what angle?
I don't know. They listen. I said that once, and someone accused me of being the most Canadian expression that they've ever had. Do you know that Patrick? Like, you're going to find this surprising. The whole world doesn't like butter tarts as much as we do.
What?
I know. Like, they don't know. I have a
wonder
question
there's
for you.
none. I couldn't find any on the island. I don't understand.
Yeah, and I have a question for you, and this is, do you like them with raisins?
Yes.
I know. I'm the same way. And Lena, hop on.
Yes.
Hello, Lena.
Hello.
Do you like your butter tarts with raisins?
Absolutely not.
See,
Oh.
so I have this theory, and listen, I this might be sexist, but I found that the women don't seem to like the raisins as much as the men, and I don't know why it is. And I love raisins, and like my wife and all her friends, they think the raisins a disgusting fruit and like or whatever you call it. And I'm
I will eat anything. Raisins is literally the only thing that I will not eat.
There you go. See, they just. I am like the guy.
So you like it with the pecans, right?
Yeah.
Lena?
What do you mean with the pecans?
With
Like,
You
the
mean
butter tart.
Butter
with
tarts,
You
yeah.
mean a pecan tart
Yeah.
or pecan tart or however you want to
Pecan.
say it?
Pecan.
Yeah, I like them, but
That's just the classic. You just like nothing, no raisins, nothing, just the classic butter tart.
classic butter tart or a pecan tart, but no
Yeah.
raisins. Raisins have no places in sweets.
Yeah, so I like the guy in New Girl, that sitcom. I'm having trouble speaking. The beer's going a little quick. That used to put raisins in his mouth and leave them there for a long time and let the saliva juice them up so that they get nice and squishy.
That sounds vile.
I know. See, that's I knew
Disgusting.
you'd be disgusted because my wife was like, "That is the most disgusting thing I've ever heard." Anyways,
That's
butter tarts, stuff like a butter tart. Let's go back to the markets. Thanks
All
for
right.
coming on,
Yeah.
Lena. You proved my theory, though. By the way. So yeah, I think that I have a question for you, Patrick. How long, as these retail keep coming and chasing these things and just getting hurt because they're getting hurt badly before they start to like go, okay, you know what? Maybe I should think about things. I don't know the answer to that.
You know what's funny is because I have a lot of friends and family that are rolling in because of this. They're all the Robin Hooders, and they all like are calling. And I haven't yet seen one of them get hurt badly yet. And like you would think that I would start seeing like usually I'll start hearing and seeing people that will approach me that are like, what should I do? I'm in trouble with this stock or this and that. But I haven't actually had anyone approach me and has run into trouble yet.
Well, maybe
And so-
everyone's doing it really small, and it's just like there's so many of them doing it that it's not really hurting anyone. But I'm just
Not
like
yet.
shocked.
No, I'm sure there are, but I just haven't run into anyone. But you think it's inevitable because the retail is always the bag holder in these things, right? And it's anyway.
Okay,
but,
so let's talk. So we saw Tilbury, we saw Afria. That was a squeeze.
yeah. So this is Sundial.
But this is Sundial, and God bless him. I love Dave
50
Portnoy.
cents.
Dave Portnoy decided to go into this, and I don't know, Patrick. Let's just play the clip.
How big of a piece of shit is SNDL? SNDL is down 20%. It was up 40%. I own it right now. By the way, Twitter people, some day traders are so fucking stupid. Like, I tell people what I'm doing. I pump and dump. I don't pump and dump. I tell you what I'm fucking doing. I tell you when I buy something. I tell you when I get rid of it. The pump and dumpers are the people who say buy, diamond hands, diamond hands, diamond hands. You have paper bag hands. You're fucking Edward Scissor hands. And they don't tell you when they sold because they want you to be the bag holder. Not me. I'm straight out of Gennaro. I tell you everything I'm doing. I'm the cleanest, most honest guy in this fucking game. I'm eating too fast, I'm talking, and now I'm getting cramps. I don't cost you dick by saying what I sell it at. You fucking idiots. Do you know the volume on SNDL today? You think my sale affects it, you fucking idiots? I'm not doing penny stocks, you fucking penny-faced fuck. The volume on this is like a gazillion, you fucking idiots. if I was pumping and thumping and knew what I was doing, I wouldn't keep getting my fucking dick run over by a freight train. Idiots. See, you should have to pass a test to be on Twitter. I want to create a Twitter where you have to pass an intelligence test.
I wish I had the courage to go on rants like that. Like, I mean,
love this guy.
He just doesn't give a fuck.
Yeah,
he just does not
love him. I love him. Like, out of all these new kind of these kind of, let's just call them millennial leaders that have captured their attention. You know, like, I think Chamath is annoying. Obviously, you know what I think about Elon. A lot of these guys I just can't have no time for. I don't think they're very good human beings. I actually think Dave Portnoy is a great human being. I see him that he goes and he's trying to raise money for all these restaurants and things like that. And not only that, what I like about him is he says what he means and he does it. He follows through. I'm a huge Dave Portnoy fan. I think he's hilarious. It's great entertainment. But I gotta just like make a clip of him saying diamond hands, diamond hands, diamond hands, paper bag hands, Edward Scissorhands. Like, he made me laugh so hard. And then his idea that you have to have an intelligence test to get on Twitter, or he's going to make another Twitter that has an intelligence test. I swear to God, it seems like half of Twitter would fail. I agree with him.
That's hilarious. No, it's true.
Anyways, Sundial, the reason we bring this up is it wasn't just El Rey and Afri. It was a lot of the pot stocks. It was an exciting place to be. And it's actually shocking how quickly it went and how an entire bubble was now put into a week. And that's kind of the shocking part about it.
Yeah, even the rest of pot stocks, like, I mean, Canopy's been on a pretty hot run. Even ACB, which was the Aurora, on a run, but they all got hammered 20+% in just 2 days, right? Like
because Patrick, the businesses need money. These not good businesses.
Oh no,
we have a whole bunch of these Canadian ones. And like one of the big ones that everyone's been trading, and that we have a Bay Street's bets, like you know how there's Wall Street bets, there's Bay Street bets. They are gotten themselves just in a tizzy about Supreme Cannabis Fire. Can you pull up a Canadian one? Because that's the go-to name. Anyways, but there's a lot of these crappy Canadian pot stocks that are desperate need for money, and they actually 3 months ago looked like they were going to drown from all the debt, the convertible debts, bonds that they issued. Now, all of a sudden, these guys have a chance to issue some debt. They should be hitting every bid they can find.
Oh, yeah, recapitalize,
and
for sure.
I hope they continue to do it. Yeah, because the reality is that these guys it looks like a lot of these companies were going to be bankrupt.
Anyway, Kev, that's enough for the talking charts. Let's move on.
Okay, Patrick, it's time for This Week in Trading History. What do you have planned for us?
Well, Kev, I've got nothing. Absolutely nothing. Like, you know what? I think this week is like a vortex in time where nothing in history ever happens on the second week of February.
I'm calling bullshit on that, Patrick. I am. So you got busy and you couldn't do one, right? Let's be honest.
Look, there was no easy ones. I would have had to have done a lot of work and to find something, and I let everyone down. I'm sorry. I promise it'll be back next week. We will do it. By the way, do you recognize what movie clip this is from?
So I know that guy. Is he the same guy that was from 16 Candles when he?
It's from the movie UHF. Remember the one that made Kramer? Weird Al Yankovic.
Okay, so I'm going to look this up. I'm pretty sure that he's the same guy that's in 16 Candles, Long Duck Wong. So which guy is he here? What's his name? I'm just trying to look at who he is.
He's the karate trainer guy that does that Wheel of Fish episode. Have you ever not seen this movie?
No, I've never seen this movie.
Oh my God, this is where Kramer came from Seinfeld. Like this is the movie where Kramer made his debut, and that's where they picked him up for Seinfeld. This is this is one of my favorite classics. How can you have not seen this?
Okay, I don't know. I don't know what to tell you.
Okay, that's it. That's your homework. We'll talk about it in the post.
Okay.
All right.
So I am right. That is the guy. That is Long Duck Dong. Sorry, I got it wrong. I thought it was Wong. It's Long Duck Dong from 16 Candles.
There you go. Anyway.
And he's also in Gremlins 2, which I didn't even know there was a Gremlins 2.
Anyway, let's go on. All right, so no stupid questions. Lena, hop on.
Hello.
This is your time
to shine.
To shine. Help us out.
To lift the quality of the show.
Slurring my words, trying to read people's questions.
All right.
Okay.
Okay,
well, let's do this.
So the first question of the week: please review why putting on a US 5 30 yield curve steepener offers a better risk reward than just shorting the 30-year symbol UB. I struggle to see how profit on this steepener trade will be made from the long 5-year side, and just shorting UB has fewer contracts to roll. If you haven't already taped this week's show, Bitcoin will be a topic Kevin and Patrick discuss, either as a second question if time, or maybe if it will come up in the discussion. From a trading perspective, what do you make of GBTC losing the approximate 20% premium it had during 2020? Great show. Thanks for inviting guests to explain new ideas or who are experts in the opposite side of your trades. I always learn something. Thanks.
Okay, lots to go on there. Okay, so let's start with the 530.
Yeah.
And the question is, in essence, why bother with the long 5-year portion of it? Because the reality is that the 5-year is trading at 49 basis points. So what's it going to go to? Is it going to go to 0? Like, probably not. Even the 2-year is only trading at, 10 basis points? How much is that going to go down?
Yeah.
The reason you might do this from a risk-reward perspective is that if something really, really bad happens, like just, I don't even want to speculate, but let's just say, imagine you're worse.
At a government level.
Yeah, like just something really bad, like, like a
Yellowstone blows up.
Anyway, something bad.
Something crazy.
The reality is that the 5 section might end up helping you more than you ever imagine. So yes, there is an argument to be made for just not even bothering, because the reality is that you're probably going to lose on the 5 portion. Don't deny that at all. But having said that, if something really, really bad happens, you might be so happy that you have the long 5s or the long 2s, because there'll be something on the other side that will save you on that side. So that is why
maybe if the volatility is low enough, maybe you could do the 5s with an option. Like use a derivative rather than just taking the future.
I just think you just own the 5s. I get it. I hear you. It's really tempting. You just go, listen, the 5s are going to be a loser. I don't deny that at all. But the one time in 100 that they're not is the time that you're going to need them, and that's why you do it. So from a risk-adjusted return, I think that long the 530 spread is better than just short 30s. Right. Okay, now let's go talk GBTC. So for those who don't know, GBTC is the Grayscale Bitcoin Trust. And for a long time, it was the go-to and only name that you could buy in terms of ETFs, or not ETFs, let's call it a closed-end fund that owned Bitcoin. And it was a very, very popular instrument for people to speculate on Bitcoin on. Now, it had run anywhere from a 30 to a 10% premium to NAV, meaning you paid an extra kind of premium to own for the privilege of someone holding your Bitcoin. Recently, it has popped down and is now trading, between 15 and 5. And so this listener has a question, what do we make of it in terms of this GBTC losing it? I think that there's going to be longer term implications that actually might end up being an issue, but that's a kind of a story for another day. In the meantime, the thing to remember is that there are more and more ETFs on their way. Here in Canada, we have a bunch of them. We actually have an ETF that you can redeem once a year. Grayscale, you can't. So when I look at the premium that Grayscale has been trading at, I think to myself, anything that is successful like that will eventually
Be diluted with more, more
right. It'll
participants.
encourage competitors, and the reality is that I fully expect Grayscale to eventually trade at NAV.
Well, so
And
if you look at this chart, though, the candles are the Grayscale, and the lower blue line is the Bitcoin, and the bigger one is the MSTR and MSTR. And what's interesting is that Grayscale, though, has been relatively trading in line with Bitcoin. Now, even premium or no premium, it's more or less been a half decent tracking compared. So the question I have for you, would you trade the short MSTR, long Bitcoin, like long Grayscale trade?
So yeah, I've actually thought about putting this on. I was going to go buy put spreads on MSTR, and I was going to buy Bitcoin on the other side, which is like I threw up a little in my mouth when I said that. One of the things that I'm worried about, the reason I don't want to buy Grayscale is that I can imagine a day when not everyone is so enamored with Bitcoin and people actually want out of this, and there is no redemption mechanism at all. So for me, if I'm going to be long a Bitcoin surrogate, I would choose the Canadian ones because we have a bunch of ETFs that actually have a yearly conversion privilege, meaning once a year you can convert it into NAV at no cost.
So that at least error.
So that means at least once a year it's going to come very close to NAV. And so for me, the trade would be to be along one of those and short some way short the MSTR. You have to be careful. Obviously, you have to make sure you limit your risk because MSTR is at a $5 billion premium. Who am I to say it's not going to be a $10 billion premium? Crazy shit happens in this market. Be careful. Limit your upside. But yes, I completely agree. That would be a great trade, Patrick.
There you go. All right, Lena.
Second question for this week. Hello from Minneapolis, which is technically further north than Toronto. Love the show and all the great insights Kevin and Patrick provide. My question is regarding managing a leap option on a commodity reflation trade. I hold options for energy, commodities, and gold miners. Is the ideal for these long-dated options to hold and not trade the position, or is there a time when taking profit and repositioning is warranted? Thank you.
All right, Kev, can I take that?
You're going to take that one, but can I just say something a little bit about Minneapolis very quickly? Beautiful area. I love Minneapolis from Winnipeg, so I was more north of you guys, but it's actually, my cottage was on Lake of the Woods, and I just love Minneapolis. I don't know what you call people from Minneapolis. Do you have any idea?
No.
No, I don't know, but they're nice, and I love them. and I'm sure it's minus like 30 degrees or something, or minus 25 degrees there, so stay warm. Actually, I'm looking it up. Minus 21 degrees Celsius. Stay warm. Okay, Patrick, take it away.
Right. Well, no, like, you know what, trading leaps on the commodity cycles is one of my staple ways that I play the commodities, and so this is right up what I love to do. The one thing that he's asking is how do you trade around it, and I mean that's always the trick, because when you own the leaps, you often want to own them for catching the bigger picture move, right? You want to capture that really big commodity run, and the thing is, often you'll find yourself in a situation where you're up 100 or 200% on the leap, and the trader instinct in you wants to say, I'm just going to harvest that, I'm going to quickly sell it and get out. And that's actually the tricky part of selling too early is that you don't know how to sometimes get back in. And so this is where you have to get a little creative. Sometimes I'll roll up the leap to a higher strike to extract intrinsic value, or I'll even collar in them. There's all sorts of stuff we do at Big Picture Trading that kind of covers that kind of stuff. But I love the leap strategy. So you're on the right track with that. It's you just have to be a little creative. Don't want to lose the big upside being over trading it on the short term.
And more importantly, Patrick, people from Minneapolis are called Minneapolitolians.
That doesn't roll off the tongue very easily.
No, it doesn't very good. It's like that ice cream with three flavors.
You mean Neapolitan flavor?
Yeah.
All right. Next one, Lena.
So third question, could the ECB peg the euro to the US dollar? And could the PBOC peg the yuan to the US dollar? And what will be the impact on the world economy? What would be the effective difference between pegging the euro to the US dollar and merging the euro and the dollar by merging the ECB and the Fed? Note, it has been claimed that the yuan is already pegged to the dollar. You can find this at dailyreckoning.com/how the Fed fails.
Yeah, so Kev,
this is mine. So yes, any currency can be pegged to another currency, but one of the things that this listener needs to remember is the moment you peg your currency to another currency, you basically forego the ability to control monetary policy. So you are outsourcing your monetary policy to another country. And so I whenever I hear stuff like this, I just roll my eyes and say it's not going to happen. And yes, there are times that certain countries, like the Chinese yuan, gets pegged to a basket. I wouldn't say pegged.
Well, they
managed to a basket. It gets
a decade
to a
or
basket.
two ago, they did have it pegged.
It's for sure. You're
right. They lifted and did it to a basket now.
Yeah,
but,
and that is often as well what they do is they peg it when it's advantageous for them, and when they want to, and then the moment that it's not, they change the peg. Yeah. So be careful. But the thing that you need to remember is that the moment you peg your currency to another, you are foregoing your monetary policy. You can't control that monetary policy.
And the whole point of floating your currency is that when it comes to capital flows and trade imbalances, everything naturally kind of fixes itself because you're allowing the currency to move. The moment you peg it, now you have to find some way of dealing with the imbalances, right?
Yeah, pegging is just a disaster. And think about all the pegs that have failed over the years. It just drives me insane. Think about what is it? The Swiss franc was pegged until it wasn't. And here's a funny story. I remember when Canada was having a lot of trouble in I guess when was it? In the 90s at some point. And there was a very famous economist from Bank of Montreal who got on and started just shrieking about the fact that Canada had to peg the dollar to the US dollar before it went to 40, 30 cents because we were on our way to the end of the world. And it ended up being that was the absolute low for the Canadian dollar, and that we had rallied every moment since. And if we had done what she had recommended, we would have been a disaster because we would have had tons of inflation because we would have pegged our currency at some ridiculously low level. Currency is a natural valve for when, economies grow at different rates, and it's really important. And if anything, I would suggest that they're probably going to need less pegging, not more.
Oh, yeah. The natural price discovery, which is something that the bond markets now lack, it would always been a very important part of what's made the last several decades work. Or you could argue also what led to the kind of imbalances today. But anyway, that's enough.
Yeah, I'll say one last thing. You think about the greatest trades in history. Think about Soros with the pound and stuff like that. A lot of these things were basically pegs that couldn't be held, and everyone could see it coming. And you should let the markets go where they want. And I think that pegging is an absolutely ridiculous idea. And anyways, that's it for that. What do we got?
Yeah.
Last question. We're going to do one more.
Yes. So I am a retired guy who loves IPA beer and is an avid fan of your show. I have taken a big position in precious metals because, like Kevin, I believe that inflation is a huge risk. However, there are many sites and commentators who claim that the price of precious metals, especially silver, is being manipulated and will never be allowed to reach their quote-unquote true value. As proof, they point to the caught reports of large short positions, the mysterious quote-unquote dumping of large futures contracts in the wee hours of the morning, and the quote-unquote spoofing fines levied on the bullion banks. Is there any truth to this claim of market price suppression, or is this tinfoil hat talk?
I guess I'm going to take this one, Patrick, because I don't want to get you in trouble with your ZH crowd. So I do like gold. I do think it's headed higher, but I think that all these people that claim that there's a suppression and all these exactly quote unquote tinfoil hat theories are absolutely out to lunch. I see a very respected money manager here in Canada get in front of people and with a straight face tell them that there's no gold in Fort Knox. Seriously, he sits there and he tells them that there's no gold in Fort Knox. Listen, I'm a trader, so I'm never going to say never. But if you ask me to place the odds of no gold in Fort Knox, that is a very low probability event. In terms of these big banks manipulating the prices. There is no doubt that they move it around. But one of the things that I want to stress is that they move it in the path of least resistance. So I think that if it had been easier to move it and spoof it higher, they would have spoofed it higher. And if it really was mispriced, then why doesn't Russia, why doesn't China just stand in there and say, bought from you?
Yeah.
Sorry, go ahead, Patrick.
Yeah, no, I'm just going to say, like, okay, a market, I mean, there's a great part that Jesse Livermore talks about in Reminiscences of a Stock Operator book, where he references that when you manipulate something to an unnatural price, then you're kind of cornering yourself, because the other market participants, dog eat dog, you're going to get someone that's going to come in there and give it to you on the other side. No different than the way that the GameStop kids or the Wall Street Bets kids gave it to GameStop or anyone else. It's like,
I think another example of that, Patrick, is when Ackman got there and started talking about his short.
Herbalife. Oh, Herbalife! Oh my God, he had 20% of the float, and Icon said, "I'm taking you down," right? And then Dan Loeb and everyone else comes in there, and it's just like,
so do they really
vultures
think that,
out of a corpse, right?
So do these people who believe that gold has been held down really believe that China and Russia would purposely forgo an opportunity to buy tons of gold and silver cheap? I call bullshit on that. If all of a sudden they were doing this and they were causing it to be much lower, those big, state operators would just go, fine, bought from you. I'll take everything you got. It's just like when I think it was with France, there was a bond that the U.S. had offered that was convertible into gold, and they called the gold Americans bluff, and they said, "Send me all your gold," and they did it. I think that was a very famous episode from Bonfire of the Vanities. So I'm more let's just say optimistic that markets do reflect the true value of something, and I especially think over the long run they generally do. And so listen, do the markets does JP Morgan and the boys ever get together and send it down for an expiry that where there's a big knockout? For sure. That shit happens all the time.
Yeah, well, that happens in every market. That's
just scheming it, and that happens everywhere. But is there some sort of grand conspiracy to keep gold under its true quote unquote value? I'm calling bullshit on it. I think that you should just get off those sites and just try to find some people who actually are long gold for the right reasons, not the wrong ones.
Now, Kev, you said the last question, but it wasn't. This is actually the last question.
Oh, really?
Because we had a shorter show, so we had time for more questions.
Sorry.
So we got an extra question.
So sneak one in.
This is a long one. So it's sometimes noted that commission-free brokers aren't really free because they sell customer order flow, with the result that customers get degraded fills. My account is not commission-free, and I almost always enter with limit orders rather than market orders. If I were to use limit orders at a commission-free broker, would I be able to avoid degraded fills and thus truly trade for free? Somehow I suspect there's a gotcha here, but it just seems logical that customers at commission-free brokers should be able to avoid degraded fills by using limit orders. Perhaps one or more of the below explained things. Limit orders are not available at commission-free brokers. Commission-free brokers or their paying order handlers put limit orders at the bottom of order queues, meaning that there is an increased chance that limit orders don't get filled at all. Retail customers at commission-free brokers live up to the dumb money presumption and don't even know about the limit orders. Your thoughts would be very much appreciated.
Okay, so Patrick, lots to uncover here. First of all, the general argument of this listener is correct, that a lot of these things will be avoided by using limits. No doubt about it. Having said that, I do believe that there are some tricks that these HFT or like order flow people use to take advantage of that. One of them is I realized that if you get a stock like Mister, and you get like, let's just say it's a $5 wide stock, and you bid for 100 shares. And let's say you go and you bid, let's say the market is 1,020 at 1,030, and you bid 1,021. Okay. And you bid for a whole full board lot, you bid for 100. Sometimes I think that you'll get a fill for 2 shares, and you think, why is someone selling me 2 shares? And there's an argument to be made that maybe they actually want to sell you 2 shares, but also maybe what they want to do is get the quote wider so that you can be not guaranteed a fill, meaning that it can trade lower without you and that people don't see that quote. So I think that there's a lot of strange little games that HFTs play on that basis. But on the whole, this listener is correct that almost all of the complaints can be avoided by using limit orders. Now, having said that, we trade at a firm that basically is the same as the Robinhood guys, and we trade a lot. And if you just know what you're getting, there's really I don't think it's as big a deal as everyone else thinks it is in terms of that people are getting hooped on that side of the equation so much. If you're putting market orders, of course you're getting you're getting the fills that are most advantageous to them. But if you use limit orders, the reality is that they can't. Occasionally you'll see a situation where you'll miss a fill that you might have gotten in another broker. But on the whole, it's not that bad. You're right. So, use limit orders.
You know, the one thing that I just want to step back and look in the bigger picture, like there are people that are day traders and where getting that extra couple cents or that extra 50 cents or on a wider spread fill makes an actual impact on their bottom line. But I think that the idea of paying no commission is only advantageous to the absolute smallest trader or the day trader. But once you get to having any reasonable size and you have a little bit of a larger time horizon, even swing trading over multiple days, looking for a little bit bigger moves, it's these whether you pay a very minor commission or no commission is a very small impact to your bottom line, and I think it's just more of a gimmick. Obviously back in the day when you were paying $50 or $100 commissions on a transaction, that was a big drag on your performance. But today, whether you're at IB or whether you're at Robinhood, it's about whether you know how to trade that makes the bigger impact than whether you're paying that small fee. That's my little rant.
I think it's good. Great rant.
All right. Anyway, so Lena, where can they send their questions?
If you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
All right. Kev, it's time.
It's time for the end.
No, it's time for skin in the game.
Oh, geez, I wanted to avoid it because I lost.
Yes, you did. Those few times.
I was already getting it already to do the end. I'm already gone on. Okay. Anyways, you know what? You got me. I was hoping you'd be bearish. You chose up. Tell people what the bet was and how you took me for another picture.
Well, yeah, you said the MSCI World Stock Index, and I think that the mistake you made was that you just did it over under the close in a bull market, which it was an easy. Like I think you just fucked up on the trade, like on the bet.
Execution error. Fat fingered it.
You were the market maker. You offered and you mispriced it.
I buy that. I didn't expect you to be so bullish. I didn't expect you to be. I thought your overriding bearishness would.
Was it? It was just a pint, though, right? We kept it friendly, didn't we?
No, I think it was. Wasn't it a pitcher? A pitcher? I think we generally.
It could have been a pitcher.
Yeah.
All right. Anyway, I have to make the bet. I have an idea, but why don't you quickly give everyone the rundown of the rules?
Okay. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the wager he wants. Every bet needs to settle by next episode, and the currency for the wagers as follows: a Duke and Duke, which is a crisp $1 American bill, pint of beer, a burger bet, a pitcher, a case of beer, which is in Canada known as a 2-4, bottle of wine with a $100 limit, and finally the granddaddy of them all, the steak dinner, which we have not yet done. Looking forward to that. The winner of the bet is obligated to create a new bet for the following week, hence why Patrick's going to do it. All wagers settle in full, and there will be no netting of positions. And we look forward to settling all these things out with the Market Huddle piss up.
For sure, because you know what? We normally can settle up our bets. We were settling up the burger bets, all these different things, but this COVID has now stockpiled a huge amount of these.
It's like the TGA account.
Yeah, it's it's just stockpiling in there. We can't net them out, and so our Huddle listeners are going to have to help us out. I mean, like we've probably got like 20 pitchers of beers outstanding on this. Anyway, so I've got a bet for you, and let's. Okay, I'm going to not say anything else, but let's. I'm not going to make the same error as you did, but you know what? I want to play lumber.
Oh, good one. We haven't bet on lumber ever.
Yeah, and this I'm specifically focusing on the March contract.
Okay.
Right. So it's the front month on the random length lumber futures. It closed at 982, and this has been the bull market. Like, I mean, what commodity's been hotter than this in the last month? Very few.
Well, yeah. Who knows?
Like, I mean,
yeah.
Like but like since January. Lumber
640 to 982
is up 55%.
Okay.
All right. So I can't do the same mistake you did. I have to give a little bit to the bull on the upside. But we're just doing will it close above or below $1,025? Now, remember, next week is a holiday Monday, so we got only 4 trading sessions, and it's important consideration. Over under 1,025.
Under.
Damn it!
Yeah,
I was gonna take a steak dinner if you said over. I literally was gonna take you there. All right. Now you know what? Listen, I'm willing to play. What do you want to bet?
Let's just do a burger. I want to get my new Happy Burger. I want to go back once this COVID gets released, and I'm looking forward to you buying me a Happy Burger.
So you're choosing under. I got to go over, right?
Yeah.
Yeah. Okay. Okay. Burger bet's fine.
Okay. Done.
All right. You know what? There's a new burger place you found, right?
Yeah, the Happy Burger.
Yeah,
it's awesome.
I'm gonna be back in a month or so. We'll have to go check it out.
It's better than the Sad Sandwich place. Okay, thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle on Twitter. Lena's there every day, and she gets tired of talking to Patrick and myself. You can listen to the Market Huddle on all networks: Google Podcast, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. Smash the bell or something or other like that. And please, if you could, rate and review us on iTunes. You know why. Patrick, where can they find you?
You can find me at bigpicturetrading.com or on Twitter at Patrick Ceresna. And hey, well, Kev, where can they find you?
I'm on Twitter at Kevin Muir, and you can go check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bull market, bear market, we're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
Lena,
Yes.
hop on.
So we need a pup update
yeah.
until they're gone. Like we're gonna every week. Well, until you you send them away, or give them away, and then there'll be less pup updates. But how are they doing so far?
They're doing great. Every morning it's been a nice surprise every morning. They do something a little bit different every day. So now they're actually able to walk around a little bit, and whenever I go close, I feel like Cinderella. You know when Cinderella gets dressed with those birds and they make dresses out of nothing and stuff? That's what I feel like when I go see them, because they crawl all over me. They want to lick me everywhere, and it's great.
That's nice. Okay, so we're going to need some pictures soon.
Yes.
We won't do it yet, but soon we're going to...
They still kind of look like prairie dogs right now, so
yeah.
They look more like
which is exactly why you need to show pictures now. Yeah. For this show, the prairie dog is a noble animal.
That's
we have
true.
to go there.
That's very
true. It is
true.
a very noble animal.
Maybe I will include some pictures next week. because they're now almost 4 weeks old, basically. Yeah, they were born on January 15th, so yeah.
Oh, that's good. That's
Yeah.
great. Well, I'm glad they're doing so really well.
I don't know
All
if
right,
I
so
can part with them.
So, how did you guys like the beer? What rate your beers?
Oh yeah, we have to do that. Yeah. Okay, Lena, do you want to go first, or do you want me to?
I can go first.
Okay, go ahead.
I was hoping that this would be a little fruitier because of Hawaiian
Oh, not fruity enough,
style
okay.
And
Yeah.
pineapple. I was really hoping that I would actually taste a little bit of the tropical fruit situation, but it wasn't as prominent as I thought it was going to be, and it was good, but it wasn't what I had expected. I would give it a 7.8.
Okay. So because it didn't actually taste as fruity as you'd expect, is the main reason I liked it. It was just a little hint. I like this one. I'm giving it an 8.6. I really like.
Oh my God! So I'm gonna kind of interject here. Okay, so 8.6. All right. So the degree of which you rate a beer high or low is really about the degree of which it tastes like Labatt 50. Like it's like literally the closer it tastes to Labatt 50, the more that you will like it. And the higher rating, and anything that tastes different, you're like my son when it comes to eating food that's different, that tastes different than chicken. It's like the more it tastes like chicken, the more he likes it, and the less it tastes like chicken, he won't eat it.
Patrick,
And
that is probably the wisest thing you've ever said on our show.
So wait, do they still make Labatt 50?
Oh,
yes,
for
they
sure.
do.
Oh my
Yes,
goodness.
they do.
I haven't had it since like high school.
Kevin keeps his cold room stocked.
Yeah. You got to call it Labatt 50, dude. You got to
God,
say it in
sounds
a French
so,
accent.
So much fancier.
Yeah, it's like when you go to a French restaurant and order something nice. So if you say it Labatt 50, it sounds fancy.
Yeah.
They'll bring it to you in a glass. Oh.
There you go.
Oh,
So
God,
I
that was the funniest thing you've ever said, Patrick. I think that was really, really. I have nothing to say. I have no rebut. Like I have nothing to retort.
So we gotta change this topic for a moment. Now, Lena, have you ever seen that movie UHF?
No, I have not.
Oh my God! This is the first time this has happened in the show's history.
I'm gonna
This-
put that as because I was not born here. I moved here when I was 11, and I think I missed the boat on that timeline.
But Lena, there's Netflix. You can watch it whenever you want.
Okay, so Lena, like you've never.
I don't know
like
how you
weird-
haven't gone back and watched it. Like this is
So-
like a classic, supposedly.
But have you but you know who Weird Al Yankovic is? You've heard
Yeah.
like Weird Al songs.
Yeah,
Okay.
of course.
So like this was his movie. Like that was like his one attempt to be funny in a movie format
I
instead
couldn't
of just
take him
music
for
videos.
like a feature-length movie. Like,
Oh,
he's like a.
this
I could
is
take him in
this
a-
is a classic.
This thing got 77 tomatoes. I'm not going to knock it. I'm going to watch it. 77
what?
tomatoes is a
And
I mean,
solid
I'll
this-
give
score.
it a shot. It's
Listen,
Kramer's-
Michael Richards, who's Kramer in Seinfeld, Michael played Stanley Spadowski in this, and it was what made Kramer. It literally was his debut, and it's what made him. Like it's a must watch.
It was a must
and
watch.
The scene in there.
David Bowie too. Bowie, I don't know what to say. Depends how
yeah.
pretentious you want to be.
Oh, it's.
Anyways, I'm with you, Patrick. I'm gonna watch it. Listen, that's our
So
homework.
like I want that's your homework. I want the report back, and all of our listeners who haven't watched That's Your Homework, go check it out. It's a classic. It's awesome. Anyway, I'm not gonna say anything else. I'm done.
This is the one
I
time
got
that
in-
Patrick wants us to watch something, we will go watch.
Maybe.
All right.
I got a new thing. Like we were talking a little bit about prairie dogs, and I found a new rodent.
Oh.
It's the hyrax. It's in Israel and Middle East and Africa. And he kind of looks like a prairie dog,
Why?
but he's kind of like the Middle Eastern version of it. There's something about him that I
What's
liked.
so Middle Eastern about it? What is it called?
Yeah,
I gotta look it
it's a
up.
hyrax. Hyrax.
Oh,
They're
that's a cool
considered a
name, though.
pest. So he's not quite as noble
I
as the
see
prairie
it now.
dog.
I see it. Yeah.
Yeah, but it is kind of like
I don't know how to describe
I'm thinking that
it.
we should get a Hyrax formation going on somewhere. We should figure something out.
Oh, they look scary.
Oh,
when they're
look,
mad.
they build dwelling holes in the type of rocks. Anyways, we should figure this out. I want to work these guys into a technical formation. I think it sounds
Vicious. Wow.
cool. That's it.
All right. Anything
Okay,
else, or are we done?
I
All
don't
right.
know.
I'm
Well,
good.
you sound like you
what
want
are
to
you
go.
gonna do when Loudermilk is not available in the U.S.?
Oh, I know. Everyone's been
Me?
telling me that Loudermilk is not
I,
available in the
I,
US.
Which is so strange to me. It's an American show, is it not?
I know it is, and it's the
Yeah.
greatest
And
show
it's
on
not
TV
available?
right now. It's not even close. It's not even close. There's nothing good. Do you know what Lena and I were watching, which is like borderline terrible, but there's nothing else. Like we're just kind of desperate. Big Sky.
What are you watching?
Big Sky.
Big Sky.
It's bad.
What's that?
It's bad, but it's like it's just I don't know. It's like on
What is
It's
CTV.
all
on
that.
Netflix?
It's all you got. It's all you got.
It's like, you know who's on it? Who was the guy that was married to what's his name? 1 second here, I'll get you. You'll know him. You probably had a crush on him. Ryan Philippe. Wasn't he married
Reese
to?
Witherspoon.
Yeah, that's right.
I've
and,
seen Ryan Phillippe in person before.
Have you?
When he was here, when he was in Yorkville for, I think he was up here for either movie shooting or if it was for TIFF. Like this was like a decade ago, but I'd seen him in person.
And did you like him? Were you like, was he one of those guys that in person
oh,
you were?
sure, it's a movie star, you know.
Oh, sure.
So, oh, sure.
We actually-
just a movie star.
We actually get a lot of movie stars in that area, though.
Yeah, no, like my friends and I used to go near or during TIFF, go to Yorkville and just kind of hang around, walk back and forth on the street there, just to see if we can catch a glimpse of a Hollywood star.
For sure.
Oh, sure. Like we saw Mark Wahlberg there, we saw Ryan Phillippe there, we saw who else was there. There's a whole bunch of other people we had seen around that area. We were broke and we were just kind of walking around back and forth just to get a
Just
glimpse
trying to get
of
a
star.
glimpse.
Exactly.
Way back when the Toronto Film Festival was just starting, because like it's gotten way more popular than it used to be.
Yeah.
My little sister and my wife went and they got tickets for the 7 Years in Tibet
Oh, wow.
because they wanted to see Brad Pitt. And that was when Brad Pitt was at his Brad Pittisness. And
You know what? Personally, I think he looks much better now.
do you?
You like that.
Yeah,
Some
you-
men
you know
men
what?
are like a fine wine. You know,
That's
they,
true.
Sometimes they get
Lena's
better with
giving
age.
away the fact that she likes older men. Like she's like Brad Pitt. Like, okay, so I could take him when he's 25, or I could take him at like 55, and Lena's taking him at 55.
So half the listeners are like, so I got a chance.
Yeah, I got it. That's just like Dumb and Dumber. So you're saying I got a chance?
Well, same thing with like Leo. You know, he was pretty when he was younger, but I prefer him now.
Okay, he has gotten. I agree with you there. He was too. He was
pretty.
too dainty before. He's become more manly. He looked actually best in the movie about about Africa. That was his prime.
That Blood Diamond.
Blood Diamond,
Oh,
quality
yeah,
flick.
Yeah.
That's when he looked the best. I agree. Yeah.
Come on. I bet you a bunch of girls prefer him in Titanic.
Oh, Titanic.
Nah, he's too skinny. He's too skinny in Titanic.
Maybe Basketball Diaries, if you want to go that far.
All right. I'm done. I'm not
Let
going
me
to
guess,
analyze
you haven't
him.
seen Basketball Diaries.
I haven't
No.
seen it either. Isn't he like a kid there?
Oh yeah, I think he was like, I have no idea how old he was, but he was probably like 7.
He looked like he weighed like 80 pounds.
Probably.
That was like when he was coming back from. Well, he used to be on a sitcom. What sitcom was he on?
He was on a sitcom? I had no idea.
Oh yeah. Oh, you don't know that? What's his
Oh, I
name?
think, was he on Growing Pains?
Uh,
Is that what
Was
he
it Growing
is that what
Pains?
it was that he was on?
it was. There he is.
Growing Pains, right?
Yeah, that's hilarious.
I mean, I just pulled that out of my head, but
He was like this little
So-
kid that they adopted or something.
right. Yeah.
So, on a topic note that just came to me right now, I bet you, Kev, that when you watch this UHF movie,
Oh, he's back
that
to
you're
this.
gonna but you're gonna come up with at least 3 WTF clips, just from this movie. That you're gonna immediately come up with ideas, and we're gonna have 3 WTF clips coming up in the just because you're gonna be so inspired, like drinking from the fire hose
look what
and all
Pat's
these other.
doing now, Kevin. Now you have to come up with 3 clips.
Yeah.
Yeah.
Listen, some of our listeners might, well, you know, they're jonesing for one more. Just they want a little bit more.
Okay, well, UHF it is.
All right.
So we'll let
anyway,
you guys go. Patrick wants to go. He's got things to do. Lena's got to go take care of the puppies, and I got to go figure out and check out a new room in my house.
have a great weekend to all our listeners, and I guess you too as well.
Don't forget,
Thanks.
it's Valentine's Day this weekend, Kevin.
No, it's not.
Yes, it is.
Oh shit, it is.
Oh,
Lena.
don't say I didn't remind you.
Thank you so much.
Thank me later.
Do you know what I'm going to do? I'm going to do the prison walk with my wife. That's what everyone's doing these days. The prison walk.
Why is it called a prison walk?
The prison walk because you just go walk
because
around.
You can't go anywhere.
Just gonna go. Hey, honey. you wanna
Just go in
for
the
a prison
backyard
walk?"
and just create a loop around
Just do
the
laps.
just laps around the perimeter.
Oh, that's what
It's,
life's like. Okay, well, Lena, thank you for the heads up. Actually,
But it's on Monday, isn't it? During
it's on
the
Sunday.
President's Day.
Oh, it's on Sunday, gentlemen. Don't forget.
What do
Yeah.
you mean? It's today? Oh, today's the 12th. Okay, never mind. You're right.
Thank you.
That's right.
You're right.
You know, everyone should owe. Everyone that's lasted this long are probably the type of people who need a reminder.
Yeah.
So, thank you, Lena. Really appreciate that. Happy Valentine's
All right.
Day, Lena.
Happy Valentine's.
You too, Patrick. I'm very confident in my sexuality. I have no problem telling you Happy Valentine's Day.
I'm not going to
You
say
can call
anything
it
at
a
all.
I know.
Valentine's
You're not as
Day.
confident. I know. Patrick gets
I-
squeamish when I say things like that.
He's blushing right now.
He is. Okay.
Oh my God.
Okay, let's go. Let's
Kevin's-
call it a day.
We're gonna
Okay.
call
All right,
it a
catch you
day
guys.
here.
Okay,
All
bye-bye.
right, catch you guys later. All right, cheers. Bye bye.